In this video, we are going to review the 50-period moving average, a strategy used by pro traders. Let's find out how. From a very basic standpoint, a 50-period moving average is defined as a charted average price of 50 periods, depending on what your chart's set at. It's 50 periods of any instrument. That's it. That's your moving average. Let's describe not only the pros and cons of the 50-period moving average, but let's dig deep into how pros use this to get in and out of trades. Look, we'll discuss specifically about the 50-period moving average, but theoretically, you can use these strategies on any time frame. Look, as traders, we are looking for any type of edge. A simple moving average can give us that. So you plot it, you look at it, you back test, and you could find winning edge to improve your P&L. All right, there's cons. Let's do one right now. The moving average is a lagging indicator. What does that mean? Price moves first, chart gets charted after. So when the price moves, then you start to get these MAs built, right? So it's going to be a lagging indicator. It's going to tell you where the stock has come from, thus building that moving average. All right, but that con definitely gets trumped by this pro. What do I use this 50-period moving average for? It is a directional change of momentum. That's it. We trade it based on momentum, the 50-period moving average. So there's no doubt you've heard about the 50-period moving average and the 200-period. What we look for is kind of like support and resistance. As we grind up towards the 50-period moving average, if we can break it, that's going to be a trend change. I like to use that even on a 1-minute chart. I just said a 1-minute chart. Look, that's key for me because I'm a scalper. We use the 50-period moving average to determine our ins and our outs, whether or not we want to be long or whether or not we want to be short. This chart right here shows you that when the 50-period crosses the 200-period, look at this momentum. It's a long trade. It's upside. The trend is your friend. Play the long when you see this. Now, why is the trend your friend? Man, it's simple. You want to be in the way the market is going. Don't fight it. You don't fight the Fed, and you don't fight a trend. That's what these moving averages are telling you. If it's an up move, just go long. We're above the moving averages. The trend is your friend. That's a long break right there. All right, it's just simply not that simple. You might be thinking, hey, moving average crosses don't work all the time, and you'd be 100% right. What you're looking for, though, is a directional bias. That's simply it. Doesn't mean that just when those lines cross, we go in that direction, but it does give you a reason to think one way or the other. Now, here's another concept that we can use these moving averages to assist us finding those winning trades. If you're looking for an opportunity and you know you want to be long, right? Look for a stock, and you can use a filter for this. Filter out stocks that have both the 50-period and the 200 below the current price, meaning we are trading above these moving averages. That'll give you the trend and a directional bias you're looking for. The final concept to consider when dealing with the 50-period moving average, of course, risk management. Those of you that watch TraderTV.Live know this is my favorite setup, and that is using the 50-period to get out of a winning trade. If you're in the money and your stock is above the 50-period and you're like, wow, I'm $1 in the money, but this 50-period moving average is hovering around the 80-cent mark, I put my stop once we break it. So we might be $1 in the money, but I let it ride up until we break below that 50-period. That's my exit point. Like most trading ideas, look, it's a moving, right? You can't just rely on the 50-period moving average. If every trader did that, it simply wouldn't work. So what you want to use it is for a guide. You want to make sure that you are guiding your trades based on above or below that 50-period moving average. It's really helped me recently with some of these big NASDAQ names. The moving average deals with just that, the price. But there are so many more moving parts to this, including, are there micro issues happening with the company? What is the broader market doing? Use it as a guide, especially if you're trading individual equity names. All right, I hope you gained a little bit of information there about the 50-period moving average and how exactly to use them to trade. But make sure you tune in every single day to Trader TV Live, watch all of our videos, and watch us live as we trade these markets and use some of these techniques daily. 8:30, join us.